Gotta let them know I'm uncontrollable.
Hello guys, welcome back to another lovely trading video. We're going to go over Fibonacci retracements, how you can use them in trading, and find buy points, or if you're shorting, maybe where places to cover your shorts. So for this example, we'll use Tesla. We will go through different other charts and on different time frames, as you can use standard deviation on all time frames. You can also use it if you're trading forex, futures, or anything. I will be doing this example on stocks as that's what I trade, but you can use it on any market, it will work. So firstly, what you want to do is find your swing low. So that usually just means the low of the move, which in this case will be this $666.14. And all you would then do while trading it live, let's say, is get your Fibonacci retracements. I'm showing you this on Thinkorswim, but you should have this no matter what broker you're using. And all you need to do is then place it at the top. So let's say we were watching this live and we saw this high, and then we see this red candle thinking it's a pullback. We replace our Fibonacci, and you can see it came back here. It pulled back to the 23.6 and then pulled back again to the 38.2, and then it's got its bounce, and then we've got a new high. Again, you can do the same thing. You push it up, we get our pullback, came back to the 38, bounced back up to the 23, showed weakness, pulled back, bounced off the 38 again, bounced up to around the 23, got weak again, and then faded back down, this time down to the 50, no bounce off the 50, just went straight through. A mini bounce off the 60, faded through a bit more, and then bounced off the 60 and started its uptrend again. So you don't want to just have orders out to buy every time it comes back to a Fibonacci level. You're more likely going to want to use these in maybe alongside your strategy, or a way to scale in. So maybe if you're a long-term investor, it's better to use these as scale in points, but if you're day trading or swing trading, you probably want to use this alongside something when it shows you. So like I use standard deviation, which are channels, and I would use them when I'm looking at a buy zone, and it also lines up with the Fibonacci. That just shows me its extended strength. However, I believe I saw it on Tesla on Friday, which we're looking at currently. Yeah, so if we carry on, let's say we were looking at this throughout the day, and we got our swing high to a swing low to swing high, and it pulls back to this 38. This is near enough like a clean hit. It hit it near enough instantly and then bounced up. But you can see, if you trade maybe off RSI and you think when it's oversold it's going to reverse, there you got a lineup right there. You got a lineup of RSI being oversold, and you've now got it coming into your 38.2 Fibonacci. So that might show you, if that's how you trade, that this is now going to be strength, and we should return to at least a bounce or a new uptrend. So that should be quite clear on how to use them. I will show you now on different time frames and different stocks and ETFs, but that's the basics of it. And this green one that might be different color on your broker, because I've customized these to my colors. The 61.8, which you can see 61.8. This is considered the golden ratio, and usually the strongest one. You'll usually see a bounce off this one if it comes down to this low. As you can see on this move, we came down to the 61. Nope, I'm not even looking at the right move. Okay, we didn't fall down that far on this one. Let's see on this one. Yeah, this was our turning point on here. Again, it's not super clean. It didn't hit right on it and then move up, but it did hit it, kind of not hit down to the 78, but bounce off this 61, which you would still consider it a bounce off the 61 because it hasn't yet hit the 78.6. And again, the reason they're not always clean bounces is because some people trade pre and after hours and consider those swing highs and swing lows. Right now you can't see it because there's no low. I think SPY started lower and moved up in the day. Yes, it did. So actually we can just move this. So, you know, the occasional trader might use this as a swing low, and then, you know, be looking for pullbacks like that. But I myself don't use pre-market data unless I'm trading momentum stocks that a lot of people are trading pre-market, but on something like a Tesla or SPY and the S&P 500 ETF, you probably don't want to be using the pre-market data unless you find that works better for you. Again, try it out, see what you like. But the same will go through SPY. So market opens, let's say we see this as our swing low, we put a standard, a Fibonacci retracement up. This would have been our first pullback. We came back into the 38. We then placed it at the next high, came back to the 38 again. We made a new high. It pulled back. We kind of bounced off this 50, did a small bounce up to the 23, then faded back down. Again, small bounce off the 61, came back up, and then this time faded all the way down to the 100. Did a double bottom, bounced back up. There's nowhere to really use Fibonacci within this area because we're not making any new kind of swing highs or swing lows. So you would kind of wait it out, and then when we came back into this new high, you can use it again. Again, it came down to the 23, kind of did do a bit of a bounce through here, kind of went down a bit and then faded back up. Then we got a nice fade down, straight down to the 30, kind of consolidated around here until breaking down, and then bounced off to the 50 into new highs. And again, you continue using it throughout the day. It's now bounced down to the 23.6 again. Bounced off, made a new high. Oh, made a new high. And then for the rest of the day, unless you're trading after hours, we didn't hit it again until after hours, and then we hit it down to the 23 again. But that's kind of more simply how to use it. Again, you could have switched to this new swing low, which you should have actually done. It was quite close, so it wouldn't have made any difference, as you can see. It's still hitting near enough into the same points, but yeah, you should always use the swing low, so sorry about that. And now we'll use it on a long time frame. So we'll use a yearly, we'll just use the S&P 500, and again, we'll go from a swing low. I haven't actually tested this one, so I don't know, but again, swing low, swing high, or new high. We bounced down to the 38, bounced up, made a new high. Again, we got kind of mini bounces down here, none of them yet hit the 23. This one hit the 23, new high, then hit down to the 23. So again, if you're trading these long term and you're investing more long term, these could be good signs just to average in. If you're looking to buy in, you could use these Fibonacci retracements. But new high, we haven't yet, and then we bounce again. We got a double top, bounce down into the 23, new high, bounce down to the 23. Again, bounce down to the 23. And then on the daily chart, even on this correction that we had right now, it didn't even pull back to the deviation. Again, you could not always use a swing high, and you could go from like a previous low point like here, but not as many traders look at it, and it's not so much recommended, so I'm not going to show you it, but you could always test it out for yourself and see if you like trading that way. And then we'll quickly use a 4-hour chart to show you again, another commonly used chart, and that the same thing works. You go from a swing low, Fibonacci retracements, come down, it came down to the 38, you can see purple line. Again, came down to the 38, came down to the 23. Didn't get another pullback until this high back here. Pulled back to the 38, got a bounce. Pulled back to the 50, got a bounce and a bit of consolidation around this area. And then we faded down to this golden ratio of 61.8, and then we got our strong bounce off there. Nope. Move that back there. And again, it's the same thing. Pulls back to the 23 on that one. And it will just do the same thing over and over. And again, if you're looking at something like SPY, which is a whole market or S&P 500 index or ETF, on more common stocks, you'll be looking for this golden ratio. But these kind of big ETFs where you're holding some of the blue chip stocks, you're not going to be pulling back most likely to these 61.8. That would be quite concerning if we saw SPY return all the way down to $355. But you can use it more, again, if you're looking for long-term investing, buying into these retracements. You can average in maybe half your cash capital here, maybe a quarter here, and if it faded all the way down to here, another quarter. But yeah, you find out what works for you. Again, same thing with NASDAQ, which is a QQQ. Again, pull back to the 50, Again, this will move a bit different to the SPY because this is more tech heavy, so when tech pulls back, this will pull back a lot stronger like we saw in the correction. Nasdaq pulled back way stronger. Again, it came back to the 61 golden ratio, got a strong bounce. And again, it came back here. Let's see what we did on this correction. Let me remove my buy zones. Again, we pulled back to the 38, and now we've got our bounce, and we probably are going to make newer highs unless we fade low. I mean, I guess this is our resistance for right now, but if we break through here, we're most likely going to see a higher high. So that's basically how you use Fibonacci. I don't want to explain it too much and make it confusing. I personally learn better by showing, so that's the best way I can kind of teach if I do it how I learn. But so if that doesn't help you, you might be better off finding another YouTube who goes over maybe exactly why these numbers are important and all that, if that's how you like to learn. But I just like to know from examples and how to use it. So that's how you use it, and definitely check out tomorrow's video because I am going to be posting how to use extensions, Fibonacci extensions, and this is how you can find price targets using the same kind of indicator. But yeah, so again, probably don't want to use it by itself, you want to use it alongside something, because by blindly just using Fibonacci, again, like any indicator by itself, is not going to make you a profitable trader. You have to have an edge, and so you need to find what your edge is if you don't already know what it is. So definitely drop a like and subscribe if that helped you, because 68% of you watching are not subscribed. So yeah, definitely sub. If you got any more questions, let me know in the comments, and that's it. Peace.
That if I get working and grinding, now I will be flying away on a private jet. And we stuck in here saying maybe one day I can make $1 million on a Monday or Sunday, maybe